one on Qs, one on SPY, and we're going to be discussing when, how, and why to hedge. So I know that that's a question that a lot of traders have, and it needs to be done in a very specific way with specific timing, or else you're going to lose. A lot of new traders have when you're new to day trading, you're going to think that you're able to just kind of go long and go short and it'll just work out and I'll pick the one that's working and I'll make money. It doesn't work like that. You need to really wait for specific timing in order to do that. And today is a perfect example of that. So let's get right into the charts. One sec, folks. Okay, so now that we are into the charts, let's talk. Actually, first I'm going to get zoomed in into the morning action so then we can see what was going on. Okay, so what we have here, if you look at where we opened up on the daily, okay, so on Qs, we opened up just a hair above the previous close. And then we came below the previous close. So above support, now below support, right? That's important. So that's kind of step one. Step two is you look at the other market, SPY, or the other stock, whatever you're trading. SPY opened up above the previous close. So above very valid support, and it popped up. So it came riding up. So now it has a chance to pull back and hold that support. So as per trade plan this morning, I said, no matter what, I'm going long above support. If we are above support, I'm going long. And if it fails, I can manage the position out. So initiated the trade long on SPY. Okay. Now Qs failed below the previous close, pops up, bumps its head into that resistance. So under resistance, short resistance. So now I'm executed in both trades. I'm executed in Qs short, I bought puts, and then SPY long by buying calls. Okay, that's essentially all I did. Now, Qs worked beautifully. Let me head over to SPY. Now, you're going to see a negative P&L on this one, but let's zoom in on my entries because you're going to wonder why. Well, how the hell was he red on that if you look at the entries? So entered, paid myself. Took some off here. Right there is where I made the mistake. Okay. So I had a lot of size in this. I double clicked and I got a little bit too much size. And with options contracts, that's a little silly to be holding that, especially on Qs. I am greatly green on this. Okay. Because I paid myself. I had a lot more follow through and I was already making and banked quite a bit of P&L. So what you never want to do is turn a beautiful green day red, right? So going back into SPY, and I know there's a lot of moving parts and moving pieces, I took off a large part of the position in a really stupid place. It was not well thought out. I should not have taken that much size off, okay? Because I was still wanting to stay in this trade. I didn't want to bail on it. It gave me no reason to bail on it. Okay, so I took off too much size. As it pops up, and I pay myself. I didn't pay myself enough, so I kind of made two mistakes in that, and that happens. So it's about recognizing those mistakes. So all good, that's fine. Ended up just taking SPY off because I was plus P&L, negative P&L by a little bit, not by a lot, by maybe $1,000 plus minus at any given moment. I'd already banked about 10 grand on Qs at this point, so it just didn't matter. It didn't make sense to keep putting in that mental capital into SPY. So bailed on the position. That's fine. I already messed up the position. I'm just going to get out. I'm not going to give any more of my time to it. Now I'm going to focus on Qs. So let's head back into Qs. So now I'll zoom in a little bit on these entries. So these entries, I was really patient, just waiting for every time it came into that previous close. It gave me a really nice opportunity to acquire and accumulate more and more of a position. Okay. So paid myself on this, locked in $12,991. So almost $13,000 on this one single trade, working it obviously over and over again. and a $445 loss on SPY, which is fine. That's a scratch trade for the most part. Now, you might be wondering, well, this was working. Why did you bail on it? Well, as I've talked about many times before, I have a farm in the mountains of Costa Rica. And today is the day that one of my cows was going to be having her calf. So we needed to get out there first thing in the morning because she was already showing signs that she was going to go and have her calf here this morning. So we wanted to get out there. Well, we ended up waiting all day long, no calf. So we got to head back out there tonight after I finish doing this and put out the scans for the evening. So it would have been nice to be able to monitor this, and normally I would from mobile, and I've done that plenty of times. The issue is if I get stuck having to pull that calf out or something happens that demands my attention, I'm not going to be able to manage this position properly. So I just took it off. That was fine. Is what it is. Already locked in a boatload on that. So I'm very happy on the day. I'm never worried about looking at the end of the day and seeing it drop out 15 points, 20 points or something like that. And I could have been a part of it. You know what I mean? That's silly. It's a very newbie way of thinking and not a professional mindset. So very happy on the day. So now I just want to go back and talk a little bit more about hedging. And I want to give you the reason, like the whys and the hows and how to line it up. So when you have two stocks, we're going to take SPY and Qs as our example, and especially those two because they're going to follow each other very closely, right? So if you have one that is above support, like just above that support, and it comes in and gives you that entry, you take that trade. The next one fails that support, comes back up into resistance. You see how both of those are real close? They're close together. And it's not just about like entering whenever, however, whatever, right? And it's like, oh, whatever one works, I'll stick with it. That doesn't work like that. If you would have done that, you would be red on both positions, right? So it's a matter of timing it, waiting for those right entries. And I know I fucked this one up. It's fine. It happens. Normally, that should absolutely be a green position, though, on SPY. And it kind of is what it is. It would have been a nicer example, but it shows you that things can still go wrong, even when you are, a professional and you've done this, 1,000 times before. Sometimes you kind of mismanage that position. But overall, the biggest lesson in this is really waiting for those right key entries, those perfect entries, and just waiting for them to come right into that price point to minimize that risk as much as possible. You cannot just be entering wherever you want because those pennies can mean the difference between a red trade or a green trade, or even a better example, a red day or a green day. So hopefully that all makes sense. And hopefully that kind of clears up any confusion about, how and when and why to hedge. It's about support and resistance and where it opens up and how it comes into those levels and just executing as per strategy. And that is it. Don't overthink this shit, guys. So if you want to learn how to do this in a professional capacity and you want to learn stuff like this in way more detail, come to tricktrades.com and we will be happy to assist you. We have our entry strategy, our risk strategy, our sizing strategy. Our entry strategy is going to get you into the trades. Our risk strategy is going to keep you in the trades just long enough so you're not bailing on positions that as soon as you bail, it goes your direction. And then now our sizing strategy that comes with an app that you get on your phone, and you're going to get push alerts on days to actually size up on and how to size appropriately for today's market conditions. It's going to keep you safe. It's also designed to take you from a $2,500 account, building it to an $18,000 account in 6 months. As long as you listen and do what we're telling you to do, it is absolutely possible. The results of that have been actually far greater than even our expectations on it. We have members that are just absolutely crushing it. They're in wheelhouse 3 and 4. There's 8 in this evolution that'll take you up to that, to build up that $18,000 account. After that, evolution 2, evolution 3, and evolution 4. And at the end of evolution 4, the first 3 people that complete that, they've all obviously been qualified. They're going to be offered a position for when I open up my hedge fund to day trade live with me and build something amazing. More information on that to come. But I wanted to fill you guys in on that. And anyways, folks, I hope you have a wonderful day. I'm already talking your ear off. Go enjoy your day. Adios.